Hey guys, and welcome to today's video. So today's video is going to be a very quick one. So as a trader, one of the skill you want to really develop to enhance your consistency and profitability in the forex financial market is the skill set and the ability to be able to identify the next draw on liquidity. And in today's video, I'm going to be showing you how you can use top-down analysis to be able to identify and speculate or predict the next draw on liquidity. So without further ado, let me just take you through my top-down analysis process. Then we'll come back to this particular chart to be able to see how that applies. So right here on the screen, this is my top-down analysis thought process. First of all, we mark out the PDRAs from current price to the buy side and to the sell side. Next, from those PDRAs, we identify institutional order flow, and after that, we frame our setup from institutional order flow. So let me just scroll down. So this is a detailed step-by-step process on how I conduct this top-down analysis process. So for those of you that want it, you can actually screenshot the screen right now. If you are watching on a very big screen, that will be better. If you're watching on your phone, still better. You can just flip it horizontally and take a screenshot of this to be able to apply this when you are going through your own personal back test. So let's just go over the analysis process very quickly. So the analysis process is the time frames we're looking at is for the weekly, daily, then we transpose all we have arrived at on these time frames all the way to the 1 hour time frame. Then on the weekly time frame, the process we are taking is we mark up every PDRA to the buy side and to the sell side relative to the current market price. Then the question will be, how do you know how far you should mark up and project? In other words, from the current market price can decide to go in one direction for a very long time, or can decide to go to the buy side and still go to the sell side very aggressively. So how do you know how far you should mark up? The way I do it, or in my own opinion, is to be able to understand the average weekly range projection. So I trade the pounds and I trade the Nasdaq, so I understand the average weekly range projection. For the pounds, it is actually 1,500 to 2,000 pips. Why for the Nasdaq, that will be around 6,500 to 8,000 pips. So this is how I'm able to frame this average weekly range projection. Now, for those of you that don't understand, when I say pips, I'm actually referring, if I say 1,500, I'm actually referring to 150 pips for your own consumption. The other way I identify price projection or how far I should mark that will be price delivery mechanism. In other words, I'm looking out for displacement in price. So on the weekly time frame, I'm looking for, okay, based on current price, as price, what the price do before it goes to this particular region, do we see displacement in price to this particular region? So if I see displacement, that means the next thing I'm looking out for is either a reversal or a retracement. So I'm looking for a price delivery mechanism. Price delivery mechanism is simply consolidation, expansion, reversals, or retracement. So I'm looking for one of those things, you get, to be able to understand, okay, how far we price project going forward into the next week. So the other process on the daily time frame will be, we transpose all we've arrived at on the weekly time frame down to the daily time frame. Then the remaining PDRAs that are still available on the daily time frame, we're going to mark that out. And if anyone overlaps with the weekly time frame, that also strengthens our conviction and attention on that particular area. Then here all we want to do is we want to see the draw liquidity on this particular time frame to this all these PDRAs already outlined. Then now we drop down to the 1 hour for the 1 hour time frame process. So we transpose everything we've arrived at on the weekly and the daily time frame, all the markups we do. Now on the 1 hour, we're not making any markup. All we are waiting for right here is we're waiting for that draw of liquidity or reach for liquidity to any of these PDRAs on the daily or on the weekly, right here on the 1 hour time frame. And the reason being that is this is where we want to apply the institutional order flow ideas to be able to frame trade setups. So this is all theory. Let's go into the chart and see some real examples right here. So now, enough of theory. Let's look at practical by applying those thought process and analysis process here on the chart. So I said, first of all, you want to be able to identify the average weekly range projection. So if you look at this particular chart here from this particular candle here, this is Monday's trading. So this is where current market price started. So if you outline for this particular area to the buy side, for the Nasdaq, I actually look out for 6,500 pips to 8,000 pips in the future. So if you project all the way to the buy side, let me zoom this down right here. If you outline from this particular area from this particular area all the way to the buy side. Around this region is going to be 6,500 pips right there. And if you outline to the sell side, around this region from that current market price is going to be another 6,500 pips to the sell side. And for those of you wondering why I was talking about pips, you can see right here as I move this particular cross here, you can see 6,524 pips. So that is how why I'm calling it pips. But on some particular brokers, that's going to be 652 pips. So it just depends on the particular broker you're actually using. So on my broker, it is spelled out 6,524 pips. So I'm just explaining that to be able to create a balance so you'll be able to understand why I'm using the word pips. So to the buy side, you can see now up to this particular area is 6,500 pips, and also this particular area to the sell side is another 6,500 pips. So another thing again you want to do is when you're able to identify this range from this particular um, current market price to this particular area, that's using your average weekly range projection. Or the next thing you want to do is you can divide this particular price range, which is from this particular current market price open to this particular area you've outlined. You can divide it. The mean threshold of that particular range can also be your near-term price projection in terms of weekly range. So that is another thing, analysis for another day. I'm not going to include that in this particular video because I want to keep this video as short as possible. So you can see that based on our average weekly range projection, we didn't get to exactly 6,500 pips, but you can see how price ignored all the liquidity on the sell side and pushed for. Let's calculate how many pips that price pushed for this week. You can see how price pushed for based on the bodies of the candle. You can see how price pushed for 3,875 pips. That's almost over half of 6,500 pips of the average weekly range. So you can see just identifying the average weekly range can be able to keep us with that anticipation and expectation on how much pips price is going to cover in one particular direction when it starts pushing aggressively. So how are you going to be able to use this whole idea to be able to frame draw on liquidity? That is the essence of this particular video. Because if you leave me, I'm going to go on and on giving you a lot of nuggets here and there. So how are you going to be able to use this is you can see right here on the right side of the chart, right, left side of the chart rather, this is the hourly chart, and right here on the left side of the chart, this is the daily chart. So we've transposed everything from the monthly, weekly, and daily time frame all on this particular chart right here. I know on the analysis process, I only mentioned weekly, daily, and 1 hour because that is actually the main time frames I focus on. But here you can see monthly. Why? Because sometimes you want to actually include higher time frames like the monthly or the 4 hours in case you are not seeing some PDRs very, very clearly. But that's not something you do regularly if you're following my own particular top-down analysis process. But if your own top-down analysis process is actually including the monthly time frame, fine. But the major three time frames I focus on is the weekly, daily, and 4 hours. But because of we just started a new month, I had to include the monthly time frame PDRs. So that's why we have these particular areas from the monthly outlined right here. And you can see how this monthly high and weekly swing high actually overlap at this particular area. So that's very, very significant to the analysis. So how do you able to identify next draw on liquidity? So we saw that price open about at this particular area right here. You can see it on this particular zone. So I'm going to be using the crosshair to be able to flow through. So you can see that price open at this particular area and consolidated for a while. Now, you want to wait for institutional order flow from a PDRA level or to a PDRA level. You want to wait for institutional order flow. I repeat that again, from a PDRA level or to a PDRA level. And how are you going to know that all you're waiting for is displacement in price? And when I talk about displacement, I'm just simply referring to impulse price move. You want to see price show a willingness to move to a particular area. Once you see that particular willingness, then you can start framing your setups. So you can see the week started at around this particular region. This line all the way to the buy side from this current price is the the monthly order block open. You can see it here on this particular area. That is the monthly order block open. Now this area to the sell side is the weekly order block area right here. So price opened here and now price started dwindling. It started consolidating around this area. There is no displacement around this region, so you have no trade. You are just sitting on your hands and watching price. So being able to identify this particular top analysis keeps you patient in the forex financial markets. You are not chasing everything. You understand? You're just calm and poised. So all of a sudden, going into this particular day, we saw an impulse price run to the buy side. Now, this impulse price run broke this particular monthly order block open. In other words, this monthly order block open, which was this particular line, was not respected at all. Price tore through it all the way to the monthly, weekly high. So the monthly high and the weekly swing high, which is this particular area right here. And you can see how price was finding it difficult to tear past that region. But we saw first stocks right here, price tore through it. That's the next day, price tore that high, reversed a little, came back again and tore those particular equal high before coming down aggressively. Now, at this all this region now, we have no trade, we have no setup. I don't get it now. We have no trade, we have no setup, but we already have an institutional order flow from this particular displacement, because now just having this particular displacement now gives us two options, either to catch a reversal or catch a retracement. Well, in my own case, I was still observing price. So price tapped at this zone, tore through it again, running liquidities on the buy side. And all of a sudden, we have a reversal, an ultimate impulse reversal to the sell side. So at this particular region, I'm observing price. Now, understanding price delivery mechanism, we have a consolidation, we have an impulse move, and price consolidated around that area, just like the market maker model accumulation right here. We had some series of manipulation around here. We had a distribution. We came back to another distribution on the buy side, and all of a sudden, price came down again into this sell side area. Another sell side area is this particular monthly order block open right there. And around this particular area, on that monthly order block open, we had a reaction in price. And you can look clearly on the daily time frame. If I zoom properly right here on the daily time frame right here, you can see that in between this low and to this particular high, we have a daily time frame fair value gap. So I didn't outline this because this was happening within the week. So all these other markups, I outlined them before the week started, but this particular one is happening within the week. So you want to also pay attention to PDRA levels that is forming within the week. So you can see this particular PDRA level, which is a fair value gap, forming within the week. And that's where we saw this particular reversal fall into. It fell into that particular daily time frame fair value gap, and we had a reaction in price. So all the way from Monday, Tuesday, Wednesday, Thursday, now on Friday, we had no trade all the way from Monday to Thursday. And that's the beauty, because now we are only waiting for high probability trade setup. And on Friday, we had a reaction in price, which is my W pattern right here. And that's the entry. So you enter on this particular area, keep your stops below that low and target that area. That's giving you around 3,241 pips. That is very, very massive. So you missed out on taking a trade. Well, okay, I won't say missed out. You sat on your hand. You didn't take a trade on Monday. You sat on your hand. You saw this impulse move, but you didn't take a trade on Tuesday. You saw this whole consolidation. You saved your money. You didn't take a trade on Wednesday. You avoided this whole run on liquidity and reversal on Thursday. You didn't take a trade, and all of a sudden it came to a particular trade. You understand why? Because you already see institutional order flow happening in your favor. You already have a displacement in price on Tuesday, suggesting that price is showing a willingness to keep going to the buy side. I don't get now. And all you're waiting for is for PDRA levels to confirm that. And we saw this daily time frame fair value gap help us confirm that and giving us a reaction in price right here. A breakout structure with a market structure shift, which I call reaction in price. And what do? You enter that zone. Your stops below that low. Confidently, you can aim for this high or aim for this next draw on liquidity, which is going to be the monthly order block mean threshold. You can see how this top down analysis is helping us. So normally we would have aimed for this particular line. This particular line here is let me bring the crosshair, is this particular monthly swing high and monthly high and weekly swing high. That's this particular line right here. But this line up here is actually this monthly order block mean threshold. So that since that monthly order block mean threshold is active, and we can see how price defied the monthly order block open. So we just drop down to the monthly order block open. So since we are within that order block range from the monthly time frame, and price is showing a willingness to defy that monthly order block, and we have seen price retrace into this particular daily fair value gap, that gives us more conviction to hold and see this particular trade pan out to the monthly order block mean threshold. So this is how you're able to identify draw on liquidity using top-down analysis. So I hope you find value in today's video. Probably I went over something too fast and you're able not to follow me through. I recommend you watch this video a couple of times to be able to grasp the nuggets shared in this particular video. If you have a question or your thoughts, you can leave it in the comment section and I'll be sure to get back to you. Until next time, see you in more videos.